I'm going to show you exactly how to get started investing in stocks, step by step. This isn't a get rich quick video, it's the single most realistic path I know to building generational wealth over time. Look, the markets have been wild lately. Headlines of fear, bubbles are forming, billions of liquidity is vanishing overnight. But when you zoom out, the story completely changes. Over long stretches of time, the stock market has overwhelmingly trended upward. And that's what matters. Everyone's talking about the AI bubble. Companies are spending insane amounts on AI infrastructure with not as much in profit, and that's causing investors to worry and sentiment to go down. But if you look at the bigger picture, then you know overall we trend upwards. And no matter where you are in your investing journey, whether you're starting with $10 or $10,000, this video will help you get started investing in stocks. I say that because I've lived it. I didn't grow up wealthy. My parents were immigrants. We moved from apartment to apartment. Nobody taught me about money, investing, or even building wealth. But I refuse to let that be my end story. While working a job, I started 10 businesses and 9 of them failed. But the one success gave me the chance to start investing, to diversify, and to slowly grow real wealth. So if I can figure it out, trust me, so can you. Here is what we will cover in this video. First, we're going to start off with the checklist. You need to know what to handle before you start investing in stocks. This is very important, and it's something that no one really tells you up front. Then we're going to talk about why you want to invest in stocks in the first place and the core reasons that matter. Then we're going to talk about compounding growth and how you can use it, how compounding itself can turn small, consistent investments into life-changing gains. We're going to go over stock market terminology, which is super important. We're going to talk about choosing a stock brokerage, how to buy stocks, and reinvesting dividends, how this can supercharge your returns over time. And then finally, we're going to talk about how you can build your investment portfolio. Quick disclaimer, none of this is financial advice. And hey, this video took a ton of work to put together. So if you find value here, do me a solid and hit the like button. It helps more than you know, and it tells the algorithm that you enjoy content like this. Before getting started with investing in stocks, it's important to have a few things in place so that putting your money in the market actually makes financial sense. First, high interest debt should be paid down. Debt like credit cards or personal loans with high interest can quickly outweigh any gains from investing, so eliminating that first makes more financial sense. The second thing you want to do is you want to essentially have an emergency fund. Life is unpredictable. Unexpected expenses like medical bills, car repairs, or even job changes can happen at any time. Having 3 to 6 months of living expenses saved ensures that the investments don't have to be sold to cover any emergencies. Another box that you can check is increasing your earning capacity. Investing works best when you have extra money to put in consistently. So in order for you to be successful here, you need to have some excess money left over at the end of each month. You can do this by either finding ways to decrease expenses or by growing your income. This can be through skill building, side income, or career advancement. And finally, the fourth box, it's important to understand your own risk tolerance. Stocks can fluctuate dramatically, and it's important to be honest with yourself on how much risk you can handle so that you can stick to your strategy during the market ups and downs like you're seeing now. Don't let any of these things stop you from investing, but just check these off one by one so that you are set up for success. I'm just the messenger, and I wouldn't be helping if I didn't tell you these things up front. Now, here is why you want to be diversified and include investing in stocks as part of your financial vehicle to make money. Investing in stocks has been one of the best financial decisions that I've made to grow my wealth. Instead of only keeping my money in savings account, which barely keeps up with inflation, investing actually gives me the chance to own a part of a company that I believe in and watch my money compound year after year. Historically, holding a diversified portfolio over a long term has been proven to be one of the most reliable ways to build wealth. Every dollar I put into stocks today has the potential to grow into something much bigger tomorrow. And that power of compounding with continued monthly contributions and reinvesting dividends and profits will explode your portfolio. Compounding growth is one of the most powerful forces in investing. Just ask my boy Albert Einstein, who famously quoted, "Compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it." It's when your money earns a return, that return itself starts earning more returns. It's growth on top of growth. At first it feels like nothing, but over time it can make you millions. This is why long-term investing in stocks is so important. The stock market has historically historically trended upward over long periods of time, which means the longer your money stays invested, the more time compounding has to work its magic. The real power isn't timing the market, it's time in the market. Even modest returns can turn into something life-changing when they stack on themselves for years. That's how everyday investors build wealth quietly, steadily, and almost on autopilot. And I will demonstrate this with you now using the compound interest calculator so that you can visually see it. Let me show you the magic of compounding and how much a difference investing and time has on your financial future. If you don't have much of an initial deposit, it's not a big deal. The important thing is that you want to make sure that you're contributing to this regularly, reinvesting dividends and holding. That's literally all you have to do. So let's just say you're starting with that $100, but your monthly contributions are, let's do 500. Modest return of, let's do 12%. Let's go ahead and calculate that. And you can see if you just put $500 in a month, after 20 years at a 12%, which is very modest and conservative, 12% return, you're looking at like almost $500,000 in 20 years. And of that $500,000, 336,000 is your return and 120,000 was your investment. Let's say you have some money and you put in 1,000, it's not going to make a huge difference. See that? It's not really as much about the initial deposit as it is the monthly contributions. That's really important. So we could even start with $1. You're still making almost $500,000 with the $500 monthly. That's monthly. So that's not bad. That's like, I don't know, let's say 150 weekly. Look at that, 600,000. And so if you really have some excess capital, you can really take things a lot crazier. So let's go back to monthly. Let's just say you're putting in a solid 1,000 and your initial deposit was 1,000. Let's say monthly put in 1,000 and let's say you want to wait 30 years, multi-million dollars here after 30 years. Let's try 20. It's a huge difference, right? Those 10 years. Look at the difference between 20 years and just 5 more years. That's crazy. That's almost double the amount of money. And so I think this is an incredible tool. Go ahead and check this out. Kind of helps you forecast and visualize where you will be here in about 10, 20 years. If you are new to investing in stocks, you will need to know some of the basic terminology that is used so that you know what you're doing. You can always pause here and write these down and come back to the video later. First, you need to know what a stock is. A stock is a piece of ownership in a company. When you buy a stock, you own a small slice of that business. Next, let's talk about share. A share is a single unit of stock. If a stock is a whole pizza, a share is one slice. Then you need to know about ticker symbols, a short code that's used to identify a stock. So for example, Apple, ticker symbol is AAPL, and Tesla, its ticker symbol is TSLA. Next, let's talk about what an index is. An index measures the performance of a group of stocks. You may have heard of news talking about the S&P is down. Well, that is what they are referring to. An index is just a measurement or a list of companies. It's not a real investment product. There is no buy index button because an index doesn't own anything. It simply tracks performance. The S&P 500 will track 500 of the biggest US companies, and the Dow Jones tracks about 30 major American companies. Kind of like a scoreboard showing how the market is doing as a whole. Next, let's talk about ETF or exchange traded fund. An ETF is a basket of many stocks that you can buy. It can track like an index, like an S&P 500, or a theme, like AI stocks or energy. So you can't buy an index directly, but you can buy an ETF that mirrors it. Next, let's talk about dividend. A dividend is a payment some companies give to its shareholders, usually every quarter. It's like getting a small bonus for owning a stock of that company. The stock has something called a market cap or market capitalization. That is the total value of the company, and the formula is share price times total shares. And usually you use this to classify how big a company is. A small cap is 300 million to 2 billion. A mid cap is around 2 billion to 10 billion. And a large cap is around 10 billion to 200 billion and more. You may have people say we're going into a bull market. That's when the market is going up. Optimism is high and prices are rising. Or you hear fears of a bear market, probably like you're hearing now. When the market is falling, fear is high and prices are dropping. You could kind of call this volatility, how much a stock price moves up and down. High volatility, big swings. Low volatility, steady movement. Next, we have portfolio. It's your collection of investments, stocks, ETFs, and crypto. Now, you may want to practice something called diversification. That's owning different types of investments so that you're not relying on just one to succeed. Next, you need to know what a brokerage account is. That's an account you use to buy and sell stocks, like Robinhood, Fidelity, Schwab. Well, actually, actually go over this here in just a moment. Then when you're buying and selling stocks, you need to know what orders you're using to buy and sell. So there's something called a limit order, which is when you tell the system the exact price that you want to pay for that share. The trade only executes if that price hits that number. Or you can do a market order, which is you buy and sell instantly at that current market price. When it comes to buying stocks, which again, I'll show you how to do that, you need to know how you want to invest. Now, there are different investing or trading styles. This video is going to focus on long-term buy and hold, but there are some others worth considering. So the long-term buy and hold, which is the example that we're showing in this video, is where you're buying stocks or ETFs and you're holding them for years or sometimes decades. Or you could do something called swing trading, where you're holding a stock for a few days to a few weeks to profit on short-term price movements. Then you have day trading. That's buying and selling within the same day, sometimes within minutes. Sometimes you hear of traders doing something called options trading. That's really just contracts that give you the right, but not obligation to buy or sell a stock at a certain price by a certain date. Before you can even start buying stocks though, you need to really look into the different stock brokerages that you can choose from. And here are some that you can look into. First, we have Fidelity. They're very reliable. They've been trusted for decades. They have great customer service. They have a huge selection of ETFs and mutual funds, very low fees, and it's really good for long-term investing and retirement accounts. You can also look at Charles Schwab. It really has a clean and simple interface, tons of educational resources, strong research tools. The Schwab index funds are among the cheapest in the market. It's really good for anyone who wants the mix of ease and pro-level tools. Then you have Vanguard, which I'm sure you heard of. It's the king of low-cost index funds, ideal for buy and hold, set it and forget it investing. It's built around long-term wealth building. It's really good for index funds and ETF investors who want the lowest fees possible. And the last one worth mentioning is Robinhood. It's probably the easiest app to use. It's quick, simple. It's great for beginners who want zero friction. It has fractional shares, crypto, and options really all in one place. It's really good for new investors who just want a clean, fast, mobile experience. Most of the time, you may need multiple brokerages depending on what you're trying to do. For this video, we will use Fidelity, but you can do the same thing no matter which one you decide to go with. After you sign up with the brokerage account of your choice, you will need to fund that brokerage account. And here is what the process of buying a stock will look like. Again, I'm using Fidelity. First, you want to log into fidelity.com. From the top of the menu, you want to go ahead and click Accounts and Trade. Select Trade or click the Trade button. Select the account that you want to trade in, a brokerage, IRA, or your individual account. Next, you want to enter the ticker symbol in the symbol field. For this example, I will use VOO. Choose buy or sell. For this example, we are buying. Next, you want to select shares or dollars. Because this is a test account, we will use dollars. Choose your order type. Are you doing a market order, which executes immediately at the current market price, fast but the price can move, or a limit order? You set the max price you want to pay. Order executes only if the stock hits that price. It's good for price control. I'll use a market order for this example. Next, we have quantity. You want to enter the number of shares or dollar amounts that you want, even if it's fractional shares. Fidelity supports fractional share purchases. So here I'll put about $50. Next, you preview your order. Fidelity shows you a preview screen so that you can confirm the details, things like account, symbol, quantity, order type, estimated cost. Always review this and make sure it's correct. Then you go and place your order, click buy or submit, and then you'll see a confirmation when it is accepted. You can then just check your order status in the activity and orders section. You'll probably get an email of the confirmation of purchase. Let's say you already own a group of stocks. It's important to consider reinvesting your dividends because that's one of the quietest and strongest wealth building moves an investor can make, and it's very simple to do. Now, when a company pays you a dividend, you have two choices. You can take the cash, or you can use that cash to buy more shares of the same stock or ETF. And reinvesting means choosing option number 2. Every time you reinvest your dividend, you own more of that company. And those new shares also start paying dividends as well. It's like a snowball growth. You don't have to time the market and think about price or even make decisions. Every quarter, the cash goes right back into buying more shares, even when the prices are low. This actually helps your long-term returns. Stock growth plus dividend growth plus reinvesting your dividends is really good for explosive long-term results. So here is how you can do this inside of Fidelity. First, log into your Fidelity account. This process is similar across all major brokerages, but for this one, navigate to accounts and trade, then go to account features. From there, select dividends and capital gains, and then click manage. Choose reinvest in security for the position you want, then save your changes. And that's it. Super easy. Your dividends will now automatically be reinvested back into the assets, helping you compound your returns over time. Building an investment portfolio is basically creating the strategy behind how your money grows. We're not here here buying random stocks. We put together a diversified mix with different risk levels and with a strong foundation. Before picking specific stocks, I would build a strong base, usually with the broad diversified ETFs or index funds. This will give you instant exposure to hundreds of companies at once. This will lower your risk and smooth out the ups and downs. Think of it like the core of your portfolio. For example, I invested in VOO, Vanguard S&P 500 ETF, one of the most popular and trusted investing funds. Instead of buying all 500 companies one by one, you buy one share of VOO and you instantly own a tiny piece of all of them. After you have done this and you get comfortable with ETFs, you can then look into growth stocks. This can be technology and AI like Nvidia, Microsoft, or Google. These companies can grow faster but also have more volatility. That's why they sit on top of your foundation. As you continue to grow in your investments, you will start to add higher risk investments and overall create a well-diversified portfolio. I actually made an entire video on how to build $1 million investment portfolio from scratch, which you can watch here next. Thanks for watching.